What's up, folks? Honey's Morning Update, June 7th. 88.92, you're over under. 96 to 81, so another tight overnight range, just like we had yesterday. We did dip down to the 68, but immediately, that wicked right up. So as of now, you can say this one's too. So, any dip down here is being purchased. So I don't know if maybe they're afraid if we get down here, we tumble. But, it's been resilient. It's holding on, but it's also just holding range. So, we had a move up here, kind of a consolidation there, move up, and then now we're just consolidating. So I don't know if this is just a bull flag and then we're going to head up. A lot of bulls out there now. A lot of people are saying that the bear market's over and this is bullish. Could be. But when people start to switch that, it makes me kind of raise an eyebrow. Here's your hourly pivots: 85, 43.01, 43.11. These are going to be tight because yesterday's range was fairly tight. 75, 58, and 49. They're okay today. Here's your dailies, still above the 4,200 level. I would have really liked a test of that before we headed back up. That would have been ideal. And it still could happen. Or we come back into the 55-35 range where we've spent, an entire year, basically. Upside, still looking at that 27-30 area, then the 50. 50 is really kind of my top for a resistance, and then we get into the 4,000 area. So we'll see. I've left that trend line just for fun. I should probably just take that off at some point. All your spaghetti is way down here. 41.56 is your closest moving average of 50-day moving average. So that's right into the volume. So if you think about a heavy move, okay, that'd be 150 point down, but that would be, so now you've got a 50-day moving average in that volume accumulation area. Here's your 09 quarter, which is the a fib level from your all-time high to the down and then up. So we've come down, but then it's just, I don't know, man. It's just a weird market right now. A lot of people are on the sidelines. A lot of people just don't know. It hasn't it hasn't been friendly. And premiums have been terrible, so we all know that. Euro still holding that 107. That's been a battle. So we'll see if that ends up holding and it comes back up, or if we continue to go down. If we lose that 05 again, that's when we start to look at that 95. That was a huge low down there. So something to still keep in mind. Nothing is good in Europe. It's just all facade, but doesn't mean, this can't go up. Lord knows we don't trade on that type of stuff. Cash gap down below, 41.21. I have a little guy up here at 05.02, which I've been looking at. And then I've got this one up here from April of last year, 85 to 93. So that would be also a target if we were to race up here. Anything's on the table, I don't know. 41.34 is your 50-day on the SPX, so that's also a level I would be watching. And you can tell it's right in all the volume right here. So, but we do have cash gaps down here. But anyway, so that's kind of that cash gap. So 41, I could see it coming down and holding there. I could see this one being filled at 05. This one I have no idea. So anyway, that's kind of where we're at. Slow economic week. We have trade deficit at 8:30 and consumer credit at 3 p.m. I don't know if that's going to hit anything. That could be a doozy because I know that we're at record credit card debt within the U.S. And then Thursday, look at that, Friday, nothing scheduled. ES roll will be on Monday. I think most people are going to start rolling the E-mini contract to September, I believe. Anyway, stay safe. Premiums are terrible, so you got to pick your spots. You've got to be, right on, and patience is a virtue here. So if you don't see it, don't trade it. Put your hands in your pockets. It's again, this is this market structure has been very tough. It will change. We just have to be patient and ride it out.